You've probably heard of indicators like moving averages, RSI, MACD, but have you heard of the squeeze momentum indicator? Why? Because it is actually the most popular community-made indicator on TradingView. And today, we're going to find out exactly what makes it so special and how to optimize and use it in the markets. Let's get started. First, let's head over to tradingview.com. To add the indicator, click on the Indicators tab and search Squeeze Momentum Indicator. It's going to be this one, by Lazy Bear. This indicator is actually based on a profitable trader's technique, discussed in his book called Mastering the Trade, which shows that this indicator has been proven to work in the markets if used correctly. Let me quickly explain what each variable of this indicator does before we move on to the way Mr. Carter, the book author, suggests us to trade with it. First of all, these huge red and green candles signify the momentum of the market. If the candles are green, the momentum is bullish, and if they are red, it is of course bearish. When the candles turn darker and become smaller, it means that the momentum towards that direction is decreasing. So that might be a good time to exit your trades. Next, the black and gray crosses show us when the market is entering a so-called squeeze, meaning that the price is contracting and not showing much movement. The theory is that the market moves in these contraction and expansion cycles, and this indicator aims to catch the moment when the state changes, and it does a pretty good job at that. If you didn't understand something, no problem. Just screenshot this and check it if you forget anything. John Carter suggests waiting till the first gray cross after a black one, and taking a position in the direction of the momentum. For example, if momentum value is above 0, go long. And to exit the position when the momentum changes, which is signified by the darker candles. So let's take a few trades to test his approach. Here the cross has just changed from black to gray, and the momentum is bullish. Let's take the trade. For the stop loss, to make it simple, let's add the ATR stop loss finder. And let's quickly change a few settings to have nice and tight stop losses. Change the length to 16 and the multiplier to 1.3. Now, let's wait for the color change and exit the trade. Great, this trade won with a 2.2 risk to reward. But now let's look at where the indicator performs poorly and how to fix that. Because as you know, no single indicator is perfect. Here we can see that just as we enter the trade, we have to exit it at a break even or a small loss. It might not sound that bad, but when the consolidation goes on for a while, the losses can stack up. To filter out the false signals, we'll have to optimize the indicator settings, add a few rules, and find a way to avoid the consolidation. And I'll show you exactly how to do that. Just so that we would be on the same page, open the GBP-JPY pair in the 5-minute chart. The indicator works on other time frames and markets too, but I will be optimizing it to fit the Forex markets. First, let's go into the indicator settings. We will need to make it a little less sensitive. Change the BB length to 19. BB mult factor to 2.2. KC length to 21. Leave the KC mult factor at 1.5. And make sure Use True Range is checked. The changes might seem small, but look at what difference they make. They turn profitable trades more profitable, and some break-even trades into wins. Also, after the changes, some crosses will be colored in blue. This shows that the price is about to change its state, but still has some indecision. We will not be using this feature in our strategy, so you can color them the same as gray crosses. To make everything easier to see, go to the Style section and drag the opacity of each color to 100%. I will change the gray and blue crosses to white. As you see, now the indicator is much easier to use and allows us to catch bigger moves without stopping us out 2 candles into the trade. Now I will explain how you can trade using this indicator. You will need to make sure to follow a few simple rules. Pay attention because this will make or break the strategy. To enter a trade, you will need to see 2 things. The momentum candle has to be bright and the crosses have to be white. To avoid the false signals, Make sure to not enter if the entry candle is 2 or 3 times bigger than the average candle, because that means the move already happened. Also use common sense and avoid completely ranging markets. I would recommend sticking to the London and New York sessions only, because at those times the volatility is much higher, resulting in bigger moves and lower commissions and spreads. Set your stop loss at the ATR stop loss finder line, using the same settings I've shown before, and exit the trade whenever the momentum candles turn dark. If you're not experienced with price action, make sure to add a confirmation indicator, for example, a moving average, only taking buys when the price is above and sells when the price is below. This, you will have to test yourself to figure out what fits your style best. Make sure to backtest this yourself to gain confidence and better understanding of the strategy, and share your results in the comments. If you found this video helpful, make sure to subscribe for more content. Good luck, traders.